Now, Bitcoin is about to see its third halving. It could happen as soon as today. A short explanation of what this means. In the Bitcoin network, user transactions are grouped in blocks and recorded on a digital ledger called the blockchain. Miners are in charge of this task, and they are rewarded Bitcoins for doing it. Now, the amount of Bitcoins they get for each block decreases every time you see a halving. It's cut in half every 210,000 blocks. This means miners have to do twice the amount of work to get the same amount of money, of Bitcoins. So the event is often associated with price spikes and increased volatility in the digital currency. Joining us now is Antoni Trenchev, Nexo co-founder. And Antoni, let me ask first what you expect from this halving. When do you expect it to happen? Do we know exactly? And what do you expect to happen in terms of the price of the underlying Bitcoin?
Well, Bitcoin's fundamentals have never been stronger than they are today. So we are expecting the upward trend that we have seen in the past 10 years to continue into the halving. As you correctly pointed out, Matt, there's bound to be some volatility, but, you know, traders and investors should not get caught up in the day-to-day movements of Bitcoin. They should remain on the bigger picture, their eye on the bigger picture. And the truth is that Bitcoin is the only free market we have right now. It is showing amazing resilience through this pandemic and the sell-off of risky assets. And this has happened without any external support, without the federal, without the Fed supporting any sort of stimuli packages or anything like that. So we are positive, and we see the influx of new clients at Nexo coming to realization that Bitcoin is here to stay, and it's one of the best protection mechanism against inflation.
But if I take a long-term view, good morning to you, Antoni. If I take a long-term view, as you suggest, I look back, not all that long-term, medium-term maybe, to the end of 2017, it was up at 19,000. It's now at 8,600. If I were a medium-term investor in Bitcoin, I might be disappointed by that performance.
Well, that is a slightly shorter view than you would expect from somebody, taking a decade, which, Bitcoin has outperformed anything else, the S&P, gold, the dollar index, absolutely everything. And let's see where it goes from here. I stand by my prediction that I made with you guys earlier in January that Bitcoin is bound to reach 50,000 by the end of the year. And luckily, we got some strong support in the face of the likes of Paul Tudor Jones joining in the chorus that this is reminiscent of gold in the 70s. And I would argue that Bitcoin right now is your get out of recession-free card.
50,000 by the end of the year is an aggressive call, and you got a lot of coverage with that call as well, Antoni. What underpins those expectations? I mean, what do you think drives Bitcoin to 50,000 by the end of the year? Are you expecting other fiat currencies to crash in the face of inflation?
Matt, just a quick reminder here. In the past 2 years, we have seen about $8 trillion worth of fiat money getting pumped into the system, and the markets have not even reached the level pre-crisis. In this moment of very, very aggressive quantitative easing, I think cryptocurrencies, and especially Bitcoin, come in as the exact opposite, with hard-coded invent into the very fiber of what Bitcoin is, this quantitative hardening, absolute opposite of quantitative easing, which is a fundamentally different thing and is only akin to gold. And now Bitcoin is glowing in its full glory, slowly but surely, based on this disinflationary curve of its Bitcoin supply, the unforgeable cost of producing it. And I think the markets and the investors are coming to realize all these amazing properties of Bitcoin. And I definitely think we are in some very good times here.